Hey everyone, it's Revenue Ravi here. So you've reached an exciting point. Your debt is sorted out, your budget is planned out, and you're looking towards the future, which looks bright. But you're now faced with one of life's biggest dilemmas. What should you do with the cash? Well, after you purchase yourself a nice, reasonably priced, congratulatory drink of something, you have a lot of options to consider, but simply keeping your money under the pillow or under the mattress is not going to work out. And that's because of inflation. Inflation is going to sap away its value over time. Instead, what a smart person like yourself would do is put that money to work, make that money generate income. All right, so some of you guys may be thinking, why is this guy who barely looks like he's in his 20s and has his hat backwards telling me about financial advice? Let me tell you why. First of all, the hat is because my hair is growing and I want it to grow. I'm changing my hairstyle, so it's part of that process. I don't want to show you guys a mess. That's why I'm wearing the hat. And also, I've majored in finance in my university, and also I've saved, I've invested, and I've also traded. So I've done all three things, and hopefully I'll be able to give you guys some knowledge that will prove its worth. All right, so let's get into it. There's three main things that you can do with your money beyond spending it, obviously. Saving, investing, and trading each come with their own level of risk and a corresponding level of return or reward. Now, how much weight you give to the risk or how much weight you give to the reward completely depends on you and your goals. Someone seeking financial peace of mind will take a very different approach to someone who's dead set on making millions overnight. All right, so to pick your poison, you really got to understand how these strategies work, what each investment does and what it offers you, what the reward is and what the risk is. And all of you guys have found the perfect spot to do that. You're at the right place. Let's go ahead and break down every single detail. Now, you could use the piggy bank, but it's not ideal. Not only are you going to run out of space, but the bank of bacon, they don't give you interest. As thanks to inflation, it's always going to make sure that your money erodes. So we want to fight against that. And for that, we get into savings. Savings are going to help you. Now, given that you put your money into a savings account, you actually get an interest. Now, you can either choose an easy access savings account, which is going to let you sort of withdraw anytime, or you can choose a fixed rate account, which is going to make you lock up your money for a year or two. However, they do give you more interest. However, savings, they do have their disadvantages. For example, their interest rates are just not enough. For example, it's so bad that even if you get a 2% interest rate back on your money that you've put into a savings account, that's considered very, very good. And that also means your cash isn't going to swell up over time. It's really not going to take you anywhere. So if you're looking for stronger returns in the medium term of your investing journey, you got to look into investing. Let's look at that. So investing can seem complicated, but the core idea is very, very straightforward. All investing is the idea that you want to put money behind things that you think are going to grow over time in value. And obviously, as these investments get more or less popular, the more or less money you make. So it does come with its own risk. And some investments can also offer you an option where you actually get money before you even cash out. For example, if you purchase bonds, you're going to get interest rates. And also, if you purchase some stocks, they're also going to give you some select dividends. So staying invested in a product for a long time, it can really help. It definitely will make an impact. But again, don't forget, there's no such thing as a free lunch. You absolutely could get a payday, and I want you to get a payday. However, the risk of you losing that money is all there as well. That's the game. If you invest and you're looking for reward, the risks come with it. And honestly, if you take it from me, a better option for new investors, I'll say, and this is something that I do to this day, is invest in ETFs, invest in indexes. What indexes are is it's a collective basket of big name companies. For example, Apple, Tesla, Amazon, those big companies that are not going to go bankrupt anytime soon and most likely are going to go up in value. You can invest in those indexes and actually make a profit over time. But if you really can't wait to get your hands on more money, there's another option for you. That's trading. So let's look at it this way. Savings is like a snail moving, and investing is like a turtle moving. But trading, that's like a bunny on steroids. That thing is flying. It's high risk and high reward. Traders don't plan on holding these for years and years. In fact, they don't even hold it for a day sometimes. They're in and out very fast, just like a drive-through. Depending if they scalp, literally takes a minute for them to close a position. So again, this means that you're able to profit just in 10 minutes. Now, that's huge. In fact, if you get lucky, you can even quadruple your money in the space of 1 hour. But you'd really, really have to get lucky to do that. I also want to say this as a trader myself, there is a very thin line between trading as in investing and gambling. Oftentimes, a lot of traders, they're speculating on which way the market's going to go. Is it going to go up or is it going to go down? And especially if you leverage your account, the potential for reward and the risk that you have of losing the money intensifies it exponentially. And also, before I forget, I want to tell you another thing. When you trade, you're pitted against the top people, the institutional traders, the banks, the guys who do it for a living. And they've invested in millions of dollars of equipment when it comes to data crunching software, AI bots, and everything that you can imagine to give them an upper hand. However, I don't want you to be discouraged because of that, because there is ways that you can combat that. And I've actually made videos about exactly how you can do it. But point is, trading is very, very risky. High risk and high reward. If that's what you're looking for, if that's what your portfolio demands, if that's what you are okay with, then go for it. It's an amazing opportunity for you to learn the market, for you to learn investments, fundamentals, technical analysis, and all that. So it's a very good thing for you to do. So again, let's wrap it up and let's understand why you would choose saving, investing, or trading. Why would you choose any of those? Well, to get that answer, ask yourself this. Do you want money tomorrow? Do you want it in the next month? Or do you want it in a year or 5 years or 10 years? Do you want massive returns or just a little extra change? And also, you got to manage your risk. Is it going to be a disaster if you lose your money? Or do you have some money stored away which you can sort of experiment with? All that decision is completely up to you. Ask yourself those questions and make the right decision for yourself. My job was to just give you some knowledge about what those investments bring and what they are. And again, if you want more information on any of those 3 investment styles, let me know in the comment section. I'll make a more specific video specifically focusing on trading, investing, or saving, whatever you guys want. Let me know in the comment section below. But if you enjoyed, like, subscribe. Thank you so much. Take care, folks.